Welcome back. You're watching NDTV Profit, and the Nifty is again headed back to the 8200 level. So the markets are on a firm footing today. Through the day, they have traded in the green. The small caps, the mid caps, they're all keeping step with the frontliners like the Sensex and the Nifty. Let's pull out the chart of Talwalkars for you. This is a company which runs a chain of gyms. That stock is high by 4%, but earlier in the day it was up nearly 7%. We have the management with us to talk to us about their earnings. The earnings were quite strong. Income was up 23% and profit after tax is up 18.8%. We've got Mr. Anant Gawande. He is a CFO at Talwalkars Better Value Fitness, joining us on the phone line from Mumbai. Thank you so much, sir, for speaking with us at NDTV Profit. It's been a decent quarter for you. The top line growth has been quite good, but it's not completely translating to the bottom line. It's not linear growth in the bottom line. What's happening? What happened in the fourth quarter?
The top line growth was about 16% for the quarter. We had a EBITDA growth of about 32%. There has been a higher provisioning for depreciation. We almost get double depreciation provisioning in the current year versus last year, which is one of the reasons of the impact of the profit. Also, the company for the last 2-3 years had a small benefit from MAT, which has disappeared in the current year as the profit has gone up, and hence we have become a full tax company. So combination of increase in tax and increase in depreciation has meant that the PAT level has grown by only 20%.
Alright, but can you tell us how many new members have you added? What is the demand situation like for the fourth quarter?
It was a trying quarter. It grew same-store sales growth by about 9 to 10%. It was difficult to contract individual customers, so we were bundling schemes where weight loss was given with gym, maybe massages were thrown in free, etc. So that the momentum continues. A lot of corporate sales were done. These corporate sales were done in a way where we give a slight deferment of payment to those people. It was a difficult environment overall, but I think probably the worst is behind us.
Right, but I wanted to understand that, what else has pressured your bottom line? What has been the growth in your realizations? Have a membership subscription gone up? Because the top line growth is coming, but the bottom line is lagging the kind of growth being seen. Are you giving more discounts?
No, actually, if you see, the sales have grown at a particular percentage, and the EBITDA has grown at a percentage higher than that, which means there is a margin expansion. What has happened is, post the EBITDA, there is a significantly higher depreciation and tax costing as a percentage of PBT or EBITDA, which is what has impacted us. The costs remain subdued to, quiet or present, but I think what has really taken a little bit away from the profitability as these two factors.
And so, what are your margins like? You said they expanded, and what's the outlook for this financial year?
We were about 48%. These margins are achievable as a combination of Talwalkars, the franchise business, Hi-Fi, new firm reduce altogether. So I don't think that is an issue. We are trying to work on the cost and by trying and reducing rent across the board in almost all the gyms which we can. We are doing it successfully in some gyms now, and we'll continue to endeavor to do it in many more gyms in the future.
Right. Thank you, Mr. Anant Gawande, for speaking with us at NDTV Profit and giving us more details of the earnings posted by Talwalkars Better Value Fitness. Let's go across to Hina Gambhir, who has the management of PNB standing by.